Good morning, everyone, and welcome to the European crossover webinar. And we've seen quite the week, and obviously a lot of volatility. We've seen the cash dollar index continue to erode. S&Ps are not that far from their lows, and we have Italian retail sales. They're supposed to be out now, but that data has not hit yet. And we'll go and take a look at that. So for whatever reason, it has not hit. But Italian retail sales coming out now. We did get Spanish industrial output earlier, as well as UK Halifax house sales. Italian retail sales, for whatever reason, have not hit yet, as I mentioned. And in the morning, 7 a.m. Eastern, we'll have Mexican gross fixed investment. But obviously the key report will be non-farm payrolls. They are expecting 175,000. Last was 225. Now, manufacturing, they're looking at a loss of 3,000. Last time was a loss of 12,000. Average earnings, actually looking for a gain of 0.3. Some of these you have to wonder how much they'll even impact with the amount of selling and volatility that we've seen. We also have Canadian employment. That's going to be out. Last month there was 34,500. They're looking for a gain of 10,000. And then later on at 9 a.m. Eastern, we'll have ISM manufacturing. As well as IVPMI. And as I mentioned, we've seen quite the move. Take a look at the euro. Euro is still adding on to those gains, I guess, as the end of the week, and people have tried to step in front of this pair, I guess, and try to sell it. And we talked about this a couple of days ago, how we thought, it feels like it should be able to pare back down, but we've seen where euro will just continue to add on some more now, and that's exactly what they've done. And they've really just pushed this for all she's worth. Oh, we are coming up into some resistance here, 1282, but boy, what a turnaround. And needless to say, with the S&Ps, we've pushed very, very low. We'll get to that. But I think what we'll do is we'll just kick off with the FX story, and then and we'll get on to FX, and then we'll wrap up with the S&Ps, crude and gold. Italian retail sales did come out at flat. So Australian and New Zealand dollars reprieved as dollar stumbles and suffer elsewhere. The Aussie and New Zealand dollars clung to rare weekly gains on the U.S. dollar on Friday as Treasury yields plunged to historic lows, but all three currencies were losing to the euro and yen as the outlook for interest rates shifted radically. The Aussie was hanging on, having climbed 1.3 for the week, away from an 11-year trough, 11-year low of 64.54. However, failure to clear chart resistance at 66.46 left it vulnerable to a setback at any time. It's not helped by the disappointing data showing Aussie retail sales fell 0.3 in January as a week of brush fires and smoke kept shoppers indoors. I thought they were done with those brush fires. The Kiwi dollar had added 0.9 for the week to 63.06. Again, leaving behind an 11-year trough of 61.80. The bounce, though, was not any sign of domestic strength, but rather the U.S. dollar weakness as markets rushed to price in even more outsized cuts from the Federal Reserve, following its emergency half-point easing this week. Such an easing would dwarf anything the RBA might manage. Having cut a smaller or having cut a quarter point to 3/4 early this week, policymakers have emphasized there is room only for one more move. Yields on U.S. Treasuries have more than half the size to January to stand at just 83 tenths. The scale of the drop thus far outpaced that in the Aussie yields. As a result, U.S. yields were now only 15 basis points above those in the Australia compared to a premium of more than 60 basis points earlier in the year. The global mood swing against the U.S. dollar is likely to extend near term. Pressure where we record real money Aussie dollar shorts in the future market, said Westpac analyst Sean Callow. But the broad picture remains bearish for odd crosses. Sub 64 is still a reasonable monthly week target. Indeed, the Aussie has not fared at all very well against the yen and the euro, which both have surged on the U.S. currency. And we've seen that when you look at the euro odd. Boy, what a move that thing has made. And lastly, euro and yen gain as the dollar's rate advantage evaporates. The dollar fell against the euro and the yen on Friday as sliding U.S. Treasury yields eliminated more of its interest rate advantage over other currencies. Mounting fears over the coronavirus have driven a drop in expectations for U.S. rates. Markets now bet the Federal Reserve will have to cut rates by 50 basis points for a second time this month. The resulting collapse in U.S. Treasury yields has ended one of the most popular carry trades globally, borrowing in negative rates in the euro and yen to buy U.S. assets. The euro has now reversed at all earlier losses for the year, rising from below 108 for a few weeks ago to above 112. ING analysts said they were targeting 115 in the coming weeks as aggressive U.S. rate cuts contrasted with limiting room for action in the ECB. Fed funds were priced in about 90 basis points of further easing by the end of the year. For now, expect dollar weakness versus G10 to continue, and G10 FX segments outperforming European market or emerging market FX with carry trades. The euro last stood at 12.34. We did see it right now at 12.73. Against the yen, the dollar dropped 0.3 to 105.82. Holy smokes, the yen is benefiting both from the dollar weakness and reputation as a safe haven. Now let's go and move on to those. So the euro extended another strong leg up on the back of weak equities or weak U.S. equities, with further unwind of the carry trade surpassing 12.31. Immediate resistance, it will be 12.59 followed by 12.85. Well, you can see we're almost there at 12.85 right here. And potentially this could maybe stretch as far as 13.26 if they clip those stops. So that is what we're going to have here. We're going to have 12.85. That'll be the resistance. Obviously right there, and boy, what a move. Look at this. And those that have stood in the way, holy smokes, they have been just absolutely bludgeoned and run over. We talked about this. We said, hey, look, it's open to a pause here. But I think we said this 2 days ago, but we said, we've seen those have traded the euro and over the last few years have seen where a market looks like it should go and dip and it just extends another leg. And sure enough, that's exactly what has happened. I mean, I thought we would have eased back in here and got a little bit of rest. So got a feel for those people that did take shorts on there, but I guess with the continued erosion of U.S. equities, certainly you can see what this would add on to that. Certainly a futile endeavor to try and step in and short the euro dollar. And with the end of the week, we'll see. If it wasn't for non-farm payrolls, I'd probably say this may be it. Even if they were to try and tag 113, both U.S. payrolls, that might try and extend the move further. But anyway, we're right there. So 12.85. And then the downside, it's going to be right here at 12.31. With me. So we'll actually give it a little bit more room beyond that. So we'll go right here, come across, which would put us at 1214. So we'll go at 1214. So cable forged higher towards the pivot of 2980. You can see we're right there at the pivot. While the pair remains below the pivot, bias remains bearish. Friday's resistance above the pivot will be 3012 with support at 2880. So if we do extend that, you can see if we do make this move up here, and we're talking about right there, 3012. If we do press it, I mean, despite the erosion in U.S. equities, I mean, we've certainly seen the gain with the euro and the gain with the yen, versus the dollar. Bear with me. The gains in the cable have been somewhat limited in light of that. So we've got 3012, but that's not that far away here. And then beyond that, 3049. We'll just go with 3012. And once again, as the analysis was saying, hey, it's still going to remain bearish until we can get it back above that pivot. So that will stay bearish, the bias, and then support will be right here coming across 2982. Not 2982, I mean 2882. So the Aussie stalled, forming a small hanging man as we challenge resistance at 66.26. For Friday, the resistance will be the key weekly low of 66.78. With support at 65.69/42. So you can see we had this little mini hanging man that appeared to be right here, and we're kind of pressing it beyond that, but resistance is going to be right there, 66.78. We could see a little bit further short coming. We had that already in place, and support 65.69. I'm going to move it up a little bit right here. It's going to be right there above that line. So it's going to be 65.81. Thinking that as we go to the weekend, we'll still have the pressure on a little bit of short covering. Not that it's come off that much, so I think we can move that a little bit higher. So the Kiwi pushed a little higher, but you can see we've even extended those gains within a tight range. The resistance is going to be 63.51. We brushed beyond that. So followed by this key level here, 63.83. That's pretty clear. And we've had a nice push up here. Look at this. So you can see yesterday was still relatively tight. Today we've really extended that. Once again, I think what you're seeing is just some further short covering. And as we're at the end of the week, we could see that push a little bit further. The challenge would be 63.83. And support's going to be right there at 62.89. You can probably even make the case with this short cover. You may even see it as high as, I'll tell you what, well, we will go with that. 63.06. 63.06. Thinking that we're going to still see a bid as we go into the end of the week. So the dollar CAD finished the session on the bid in a very tight day. And we're still in a very tight day right now. Although, remember, we do have Canadian employment today as well as Canadian IVPMI. Canadian employment at 8:30 Eastern with Canadian IVPMI at 10 a.m. Eastern. Resistance will be the 34.37, followed by 34.78. 34.37. We're just going to keep it simple. Just stay with this 34.37. Well, I guess we could push it just a little bit beyond that. You see right this coming across, you have some very nice touches, which almost takes us to the high there. So we're going to call it 34.48. You see all this touches coming across? Go with 34.48 on the upside. And we're going to go with the support there at 33.38. Oh, actually it's 33.34. Still relatively tight. We could see a little bit of a swing with, with the employment data, but because this weakness we see in U.S. equities, we just keep it there at 33.34. Let's just call it 33.33. This thing has been unbelievable. Dollar peso. Dollar peso is the new Jekyll and Hyde pair. It's been up and down like a yo-yo. The pair hit new highs, eclipsing 1995. Well, heck, we've even gone beyond that. Look, we've even gone beyond 20. Resistance on Friday will be 2004, which we've already exceeded that. With support at 1973. Well, we've already gone beyond that. Resistance is going to be right there. You see they're coming across here, right there, those highs, which is going to be 2013. The support's going to be 1982. And coming across here, 1969. And let's go move into the dollar yen. Wow, this thing is continued to be drubbed. Look at that. Unbelievable. It's amazing. The fall that we've seen here. Um, the dollar yen has unequivocally collapsed as the U.S. interest rates have slid to new historic lows. The next level of support is 570 with resistance at 672. Well, it looks like we just tagged that 570. Let's look here. 565 so far. So, and that's what we're looking at when we came up to 570. We're still pressing lower. This low here, this low bar here, and actually you've got a little bit of a tweezer there. See that? That's 551. So we'll go with the 551. And there's going to be resistance there, 650. The cash dollar index has fallen below 97 with U.S. equities responsible for the dam bursting. The support will be 96.40. We've already fallen below the 96.40, followed by 96.01. So there's our 96.01 here. That's going to be support. And resistance. $96.82. The only thing that's going to help is if for some reason we see some stark turnaround in U.S. equities, which could, then you could see, snap back. But going into Friday, it doesn't certainly look likely, although anything's possible. I mean, because really this whole move's been predicated on what's the move that we've seen in U.S. equities. And moving into the Kiwi yen, this one is, you think about it, you look, and you can certainly see where the huge difference has been. Let me go on in. Look at the dollar yen here. I mean, to say it's fallen off a cliff is a bit of an understatement. But then look at the Kiwi versus the yen. And the Kiwi's been weak. You see here, we haven't seen that much movement, this week. It stayed within a relatively, wouldn't maybe necessarily say a relatively tight range, although in a sense it's been. But certainly you've not seen those dramatic moves. Now, a lot of this has to do with the collapse in U.S. interest rates, which has taken away that differential, and of course the yen being a safe haven. Support is just going to be right there on this opening low right there, which is going to be 66.60. With resistance coming in right there on that close bar right there, 67.72. And the euro yen. Now we have seen the yen continue to strengthen a bit here against the euro. But I don't see us falling a whole lot here at this point. If you consider how much the yen's already strengthened, I would go with just the day's lows here, which is going to be 1880. And resistance is going to be, actually, we moved it a little bit lower, right there. 1975. Here's that big gain we've seen with the euro versus the odd. And we've already had a pretty good run up in here. And I mean, look at this phenomenal run here. Looking at a weekly chart. And even then you can see, look. You guys already had a pretty good run in already, and we actually took out these highs to go all the way up here at 71. Resistance is going to be this high, which is where they opened up at. Boy, what a jump. This is going to be 70.67. Kind of makes me think of that Mr. T saying, I pity the fool. I pity the fool that's been trying to short this thing. Oh, my goodness. Support comes in right there. 68.41. This has already had a pretty phenomenal move in itself, too. But you can see we're giving it back here. So we've probably gone about as good as it's going to get here. And resistance, seeing, look at this, pretty good. Look at this. It looks like the market's tired here. Look, you get this bar here. Almost looks like a, well, this one definitely is a hanging man. Then we sell off. Then we come back real strong and eclipse that. And then we come back today and we're pressing lower here. So let's put the resistance right there, 77.90. Support coming in right there, 76.03. Now, we may not see that today, but we could probably see it as early as the start of this next week. There. And moving on with the Aussie yen, still relatively tight range here when you think of how the yen has gained versus the dollar. Look at that. Now, obviously, the dollar had stayed well bid for so long. And then, of course, there was the advantage of U.S. interest rates, which have turned around and not only turned around, but the expectations are they couldn't even be cut further. Why you're seeing this move continue to exacerbate. Um, but look how well the Aussie has held against the yen. And you know the Aussie's been weak as can be. Um, and even look at today, an exceptionally tight range. So I'd go with the lows are just going to be right there at today's lows, about as I don't see it exceeding beyond that, which is going to be 69.71. And there's going to be resistance 70.81. Same thing here with the guppy. We did get this fall, and the guppy was already. I mean, the starting was weaker over the last week and a half. Now this week we've stabilized, but I'm saying prior to that we had that area where it was weaker. But then this was on top of the yen strengthening, so we've actually held up fairly well here. And this 37.14 is holding up like a rock. But we'll just put the support just below that, which is going to be 36.60. And resistance right there, 37.72. Starting out still holding it relatively well. Resistance is going to be, we've actually exceeded beyond that. Let's go and take a look at a 2-hour chart. That'll be resistance 96.15. You can see this high right there coming across. That's going to work as support next. It did dip below that, but we're going to consider that for support. 95.27. And that's going to do it for the analysis here. And FX, dollar yen, look at that, still weaker. We've got S&Ps on their low. Look at euro. We're still right there on its highs. We'll just take a quick look at the crude oil, and then from there we'll go to gold, and we'll wrap up with S&Ps. So looking at the crude oil, we saw that nice rebound, and we talked about that. I think it was yesterday. We were saying that it could still come in further, and certainly it has. Um, Support here. You can look here, and I haven't really done anything with crude in some time. Although I thought um, after we got some of these headlines, I thought there was a great opportunity at that time. And you can see how once we rebounded, the market was struggling as we came back to challenge here. And it was open to a test. I didn't think we'd break this much lower, but I thought we would slide a little bit. But I'm still surprised to the extent. Looking back to see if we can find anything as far as fib. %78% would come in right there, 44.52. And that would actually coincide here with this level coming across there. $44.73. So $44.73 and then $44.52 would be the 78% back of this range here. And for now, well under VWAP and the point of control. So let's just go move into the gold market. And boy, look at gold. We have really moved higher here. We were talking about this in the chat room, and we thought that if the SPOOs broke, we would move to 1673. In time, we did get to that 1673, although we've even bolted even higher as the SPOOs or equities have continued to weaken here. And looking further out, $17.03 is 61%. So let's go mark that off. I don't know why I already marked it off. Let's just go on in. So really the target right now is going to be the 1703 and see if there's any confluence. Well, the immediate target. Obviously, it looks like you can push somewhat further. 1692 is just up ahead. You can see that's actually, and there's 1721. That appears to be an area they're going to want to target right here, 1721. Bear with me. So I think this is going to be the area they're going to want to go to, 1721. And ahead of that is 1703 to 61%. This thing really wants to add on further. Look at that. With that, let's go and move into the SPOOs. That's where the real main interest is and what is really actually driving a lot of these markets. And we've already taken out this key area right here. It's still brushing to lower lows. Look at this weekly close. Wow. A weekly action. Obviously, this is where we saw a run here with the Fed cutting interest rates. And we actually made a revisit to that area with what we were referring to as the Biden-Bloomberg rally a couple of days back, and then we saw all that evaporate. I thought it was a poor use of the interest rate cut, and I think that that's evidence where are now. We're well below that. It was just Powell's lost complete credibility. I mean, he was actually bullied into the cut, and look what he got for it. I mean, he just looks so weak at this point. It's pathetic. But anyway, nonetheless, that being said, so here's where we are now. You can see 29.32's big, although we've been below it, but 29.32, and we're looking on a weekly chart. And beyond that, on a closing basis, would have to be right there, which would be 28.99. And that's actually where the market got turned around. So hang on. And let's go move into the daily. We were pressing up down here at this 29.63, which is key. These moves have just been so huge. So right there, 29.45 below the market. Seems like that would have to be lower though. Let's go look at 29.39. US 10-year down 21 basis points over here and the squawk. Unbelievable. Look at that. And then that tells you why. We'll jump back here. Bear with me. I always like to try and tie everything in together. Why? Look at the dollar yen. So not only are U.S. rates, I mean, not only U.S. equities going into the toilet, look at U.S. rates up 21 basis points this morning, or down 21 basis points. So that's accentuating this move. Let's go back to the SPOOs. But look at the 10-year futures. Let's go and move back into the SPOOs. And you can see, look how well below we are from the VWAP and point of control here. And what I'm trying to do is find these prices are moving so fast. I mean, the strength of the move as we just blow through levels. I'm trying to find levels where there's a pause. You know what I mean? Like, okay, maybe there's an ease, and where, you know, previous yesterday we had a nice look at, we were looking for 30.34 if the market broke 29.50 as a target. And remember, we talked about 30.82 as the first battle level, and those played out well. But the not only the strength of these moves, the surge. I mean, where these moves are just chopping through levels. So you're trying to find levels where the market will start to ease back, or take a pause. So it looks like potentially it'd be here around this 29.39. Now we'll go and move into the 2-hour to get a little bit closer look. But like I said, look at this. You're flying all over the place. So these levels are just coming up like as if you're in a car and you're going about, 95 miles an hour, and the mile markers are just coming, right by you, left and right. So let's go and move into the 2-hour. So we had 29.39, remember, on that daily. And we've got 29.42. So that's an area that we'll be targeting, 29.42. Now let's do a fib and see if there's anything we have there on that. Maybe a little bit of confluence. Well, we're actually already at the 61% here of this move, and we almost made it there the last time. So maybe a little support here. And you can see that the market's kind of making a little bit of a stand there, at least a little bit. And if we break lower, 29.15. You can see here the market's already moved 5. What you're looking for is, So we talked about that 29.39, which is a little bit of confluence here with the 2 hour, which is 29.42, and we've come into this 61%. So you say, okay, well, it looks like I've probably pushed as far as I can. Maybe, I don't want to be short anymore. I'll cover a little bit, and you're seeing the market come off of these levels here at that price. Let's see here. And on the upside, we'll have to move into a lower time frame to see what we see there. Into 29.49. Remember, we had on the weekly 29.39. No, daily 29.39, 29.42 on the 2 hour, and got this. Look at this right here, this trough area here. We could push maybe just a little bit lower if you want to press it just a tad. $29.47. And we have a little bit of a zone here. You can see here we've got that sell signal right there on the 30-minute. Look how it's been pretty good. Look at the buy signal. We ride all the way up here, and we're staying there. So really what you're looking to sell is any moves back towards the slower exponential moving average. Now, I mean, we can press beyond that, but I'm just saying is the market would have to really start to change things around to change the momentum of this move. I think this is going to be key. A test in here in this 29.47 area here. It looks like we have a range here. So to me, it looks like we've got a range here. Now, I've already talked about the daily 29.39, the 2 hour 29.42, and like I said, it looks like we have a bit of a range here. These moves have been so quick that you have to kind of see if you can pick up on anything that's developing. I mean, we've already tagged that 29.72. You can see here, look at it, we're still sliding. So this 29.42 looks like a decent pause area. And when we look at what is the box that we're in, and to me, it looks like we're in a box of 29.27 to 29.72. It looked like that 72 is going to hold. You can see how important that 72 is. And we bounced off of it, but now we're rolling below it. So another thing, what the heck? Looks like my mouse stopped. No, it's working. Hold on. I don't know what's going on here. Hold on. I don't know why I was thinking like my mouse just stopped. Let's see here. So I am stuck here. My mouse appears to be working with maybe my keyboard, maybe out of juice or something. Bear with me. See if I can replace these batteries and see if that'll work. No, that has stopped. Bear with me. Yeah, it looks like for whatever reason I can't get my screen is frozen. Yeah, so I'm not sure what's going on here. So apologies. Well, we're already up at the hour mark anyway, but I wanted to go and provide some additional details. I don't know what happened, why the screen is frozen here. And Stelly is going to try and log in, and but I'm not sure what's transpired. I mean, the mouse is still on, and I just went and replaced the batteries just now in the keyboard, thinking that might be it. But it just appears that it's frozen here. Although it's, I'm looking on my screens and everything else seems to be working. Let me see if
Hey, Paulie, hi. Hey, can you hear me?
no, it looks like it just froze there because the mouse is still working.
Paulie, can you hear me? Let me try and take the screen, and maybe if you can take it back. Hold on.
But the system's not responding. I'm using the keyboard. So I'll just have to do a hard boot. So Stellis is going to try and sign in to end the webinar, but I'm going to go and end the webinar here. And bear with me. I'm going to have to force the computer shut and hope it comes back up without a hitch.
Hey,
And I think
can you hear me?
Stellis is taking over now, so he's going to go
Yeah.
on and end the webinar for us. And thank you very much, and apologies for the screen freezing.